Hello, my name is Jon Schreibfeder. I'm president of a company called Effective Inventory Management. And for the next hour or so, we're here to discuss achieving perpetual inventory in your distribution business. Now, as we go through this presentation, if you have questions, please submit them on your screen in the question and answer tab. I'll have time at the end of this broadcast to address any specific issues that you have on this topic. Now, achieving perpetual inventory means making sure that you have an accurate inventory, making sure that the quantities in your computer system agree with what is actually on the shelf in your warehouse, stores, or other facilities. Now, this is an integral part. As a matter of fact, this is the most important part of achieving our goal of effective inventory management. When I talk about effective inventory management, this is your goal of meeting or exceeding customers' expectations of product availability with the amount of each item that's either going to maximize your net profits or minimize your total inventory cost. Now, as I said, this is the most important element. An accurate perpetual inventory is the most important element in achieving this goal. It is impossible to achieve that goal of effective inventory management, to meet or exceed your customers' expectations of product availability while maximizing your net profit without an accurate perpetual inventory. What do I mean by an accurate perpetual inventory? Well, the quantity in your computer system must agree with what is actually out in the warehouse. If you don't have an accurate perpetual inventory, you're going to be forced to overstock to achieve your desired level of customer service. Now, we'll discuss some technology, and technology is a very important part in achieving this goal of an accurate perpetual inventory. But it's not the most important part. What I want to emphasize in the next hour is planning and best practices, policies, and procedures that you have to adopt in your company to achieve this goal. Now, if you don't have an accurate perpetual inventory, you're going to have heartburn. And many of you probably can relate to some of these statements that we're about to look at. Promising material that exists in your computer system but is not in your warehouse. The computer said we had it, but when we looked out in the bin in the warehouse, it wasn't there. People blame the computer. Why do people blame the computer? Because the computer can't talk back. Now, we work with lots of different inventory systems, lots of different computer systems. Each one has various features, some better than others, but I guarantee you, every computer system that's marketed today can add, subtract, multiply, and divide. If inventory is missing, it didn't evaporate. It's gone for a reason, and most times that is due to poor policies and procedures. I want you to ask yourself, are your employees running out to the warehouse or yard, wherever you stock material, to see if you have a product in stock? Why? Because they can't trust the numbers in the computer system. This wastes their time. It frustrates your customers. I often ask people, do you want to pay your employees, your sales entry clerks, by the mile rather than by the hour? Because they're always running out to see if it's available. Poor perpetual inventory results in oftentimes you delivering the wrong material to a customer. We have an expression, do it twice or don't do it at all. You don't have time to put in good policies and procedures, but you always have time to correct mistakes. This doesn't make sense. When you make mistakes, it costs you money, it frustrates your customers. it's best to maintain a good perpetual inventory the first time. Let's talk further about wasting time, and time is money. How many times has material been missing in your facility? You know it's out there somewhere, but you can't find it. I had a customer not too long ago. They had $750,000 of a special order product missing in their facility. It took 4 people 8 hours to find the product. That's 32 hours of wasted time. Look at that expense. Look at that waste. Isn't it ridiculous? We're going to solve that. We're going to set up some goals for achieving that perpetual inventory. I want the quantity available to sell in your computer system to agree with what is physically out in the warehouse. Your warehouse people, your order pickers, should be able to easily find that material. It should be readily accessible. Let's get going. I want you to start taking some notes to develop your plan of action to achieve an accurate perpetual inventory. First step is awareness. Every employee must know the cost of bad information. Every employee has to understand that your inventory is valuable, that their paychecks result from the sale of inventory. And if inventory is lost, stolen, or destroyed, it must be paid for with your profit dollars. Okay? Why do I say this? Because oftentimes there's a disconnect in employee just understanding that inventory is worth money. They may kick a box out of the way in your warehouse. You're going to lose that material. It's going to get damaged. They're kicking it out of the way. Would they kick out of the way a stack of $1 bills in the warehouse? No, they'd pick it up and put it where it belongs. I want to emphasize as well that as we put these policies and procedures in place, management must lead by example. Everything that I tell you has to not only be carried on by the workers in the warehouse, but management, who often are the biggest violators of good inventory control policies and procedures, must understand that they have to do it. I don't want to see a manager going out to the warehouse, taking material off the shelf without it being properly recorded in your computer system. What does this do? It tells everybody in your organization, well, if management can do it, we can do it too. Wrong. Look at this equation. Losses must be paid for with profit dollars. If you lose $25 worth of material, if you lose $100 worth of material, your company is not out that $25 or $100. It's out the effort necessary to generate $25 or $100 worth of profit. This equation, the value of lost material divided by your gross profit percentage, that equals the sales necessary that you have to generate to make up for this loss. In this example, if we lose $100 per week and we have a 25% gross profit percentage, we have to generate $20,800 per year in additional sales just to make up for that loss. Look, when I refer to lost material, I'm talking about anything that you buy that can't be sold to a customer or used to sell another product or service to a customer. It might be missing or stolen inventory, broken or damaged, obsolete or outdated inventory. Of course, we'll subtract the liquidation value. In what I'm going to call orphan inventory, quantities too small to sell to a customer, leftover pieces. Okay? We often show this chart, which I call an Alka-Seltzer illustration, to our customers. We just show them the sales that they have to generate to compensate for the loss of material. Now, I want you just to think about how much material you lose per year. If you lost a $10,000 worth of material and your average gross margin is 20%, you need to generate $50,000 in additional sales every year just to make up for that loss. Wouldn't it be easier just to put in some good policies and procedures? Okay. We post in warehouses as a best practice the amount of inventory, the value of inventory that was missing or damaged each week, and the total sales that we have to generate to make up for this loss. Okay? This breeds awareness. Warehouse employees start to understand that inventory is valuable, that it needs to be protected. One of the problems that we have, I should say the biggest problem we have in maintaining a perpetual inventory, is to make sure that all material movement is properly recorded. Best practice is for you to create an inventory policies and procedures guide. I'll give you some contact information on our last slide. I'd be very happy to send you an outline for creating this document. Okay? All material movement has to be properly recorded. There have to be two ways to process every type of transaction. Your way and the wrong way. I want you to discontinue all of the sloppy procedures that you now experience. What do I mean by a sloppy procedure? Well, how about substituting one product for another during the sales process without properly recording it? I was at a food distributor earlier this week. The manager was frustrated because checkout clerks in their retail stores would check out a customer who was buying yogurt, and instead of scanning each individual carton, they would take one carton and scan it 12 times. So instead of recording the proper number of pieces or cartons of blueberry and cherry and peach yogurt that were sold, they were all recorded under blueberry yogurt. Whoa! They were going to order a ton of blueberry yogurt where they really needed some of the other flavors as well. Establish a sample account for each employee that might need to take material for approval. Nothing leaves your warehouse without proper paperwork. One of the things that we find is also a best practice is that we set up separate part numbers for what I called orphan or drop quantities of products. These are quantities that are too small to sell. Let me give you an example. You might sell lengths of pipe, lengths of tubing, something like that. You cut pieces for customers. At some point, you get pieces that are too small to sell. They're called drops, remnants, orphan pieces, whatever you want to call them. I don't want you to look into your computer system and say, oh, we have 300 feet of this particular type of pipe in our warehouse. And you send someone to go out to the warehouse and they say, yes, we have 300 feet, but no one piece of that 300 feet is longer than 3 feet long. No material, I'm going to say it again, can ever leave your warehouse without proper paperwork. As I said, you need to document every type of material movement. Your receipts, your requisitions, your transfers, your returns, your sales, adjustments. And now let's take a minute. Let's talk about adjustments. Adjustments to inventory are things that you are correcting. Something didn't get processed correctly. A positive adjustment is when you realize that you have more inventory in your warehouse than you thought you had. You might say, oh, well, that's great. That's wonderful. We have more than the computer thought we had. Well, as I said before, your computer system, I'm willing to bet you, can add, subtract, multiply, and divide. If you have more than the computer thinks you have, one of two things happened. Either someone substituted one product for another without properly recording it, or someone is not properly recording stock receipts from your supplier. Either way, you have a problem that needs to be corrected. Negative adjustments have to be investigated. Best practice is going to be that any negative adjustment, the computer said we had it, but when we looked in the bin, it wasn't there. Anytime that happens, you need management sign-off. One of the easiest ways to steal material from a distributorship is to remove it, then put in a negative adjustment. These are hard to monitor. Scrap. Other item I want to discuss. You need a way for every warehouse worker to easily record scrap, material that they find or that they break, that they damage, that can no longer be sold or used. I often joke with my customers, reminding them of what I told my sons when they were 5 and 6 years old. I told them, and you probably told your own kids as well, I don't care if you break something as long as you tell me about it. Okay? I want you to tell me about it when you damage something, when something needs to be scrapped, when you find something damaged in the warehouse. And you need an easy way for them to record this so that that quantity can be corrected in your computer system and you have an accurate perpetual inventory. Now, there are going to be times, there are always times when warehouse people cannot accurately record transactions in your computer system. An example, a power outage. Okay? The power goes out. You still need to fill emergency orders. How do you do this? How do you get material out of the warehouse without recording it in your computer system? Well, our best practice includes putting a clipboard near every warehouse exit. If for whatever reason someone cannot record a transaction in your computer system, it might be 3 o'clock in the morning, they're called in on an emergency, and they don't want to crank up your computer system just to put in a transaction. Fine. They write it on the clipboard. Okay. Very simple, as you can see on this slide. The date, the quantity, the item, the reason they're taking it, and their name. We can have a clerical person take clipboard entries and enter them into your computer system once or twice a day. The key is nothing leaves your warehouse without being properly recorded. If it does leave your warehouse, if you catch people taking material out of your warehouse without it being properly recorded in your computer system or on the clipboard, it's going to be considered theft. Now, theft. A lot of theft is inadvertent. Employees not understanding the value of material, helping themselves to samples or just taking home a tool or a fastener or some school supplies, whatever. But we also have to deal with actual theft. The inadvertent theft we can correct through education, as we just discussed. But actual theft we have to be aware of. I want you to limit access to your warehouse. Outsiders, people who don't belong in your warehouse, shouldn't be in your warehouse. Service people, the guy who fixes the air conditioning, the electrician, the plumber, need to be escorted while they're in your warehouse. Customers should not be in your warehouse if we can prevent it. Now, some customers might treat your warehouse like a candy store, helping themselves to products that they really aren't going to pay for. Salespeople, oh boy. We have had many problems with salespeople and technicians going out to the warehouse removing material without properly recording it. Best practice in many organizations is to prevent salespeople or technicians from going out to the warehouse. If you have to have your salespeople in the warehouse, make sure they understand your ironclad rule that all material movement has to be recorded in your computer system or on those clipboards. Employees. I have a couple of distributors who insist on paying their warehouse people minimum wage. Okay? These people are waiting for a better job. I have several distributors who don't drug test their warehouse employees. You know what? They're going to hire the people who can't pass the drug test at other warehouses. Experienced people are more productive. We have seen a direct correlation between the amount warehouse people are paid and their productivity. The longer they're with you, the more productive they are. Training warehouse employees is a very, very, very expensive proposition. Okay? Don't tolerate any theft. If someone lands up stealing from you, get rid of them. Remove them. It's going to send a message to your other employees that you don't tolerate theft and you value your inventory as a very, very important asset to the success of your business. Now, in warehouses, most theft occurs on the receiving dock, down at the bottom of this screen. I want you to put your warehouse manager's office in your receiving area, or even better yet, between your receiving area and your shipping and staging area. This is where most theft occurs. If your warehouse manager's office is there and it is glassed in, it looks like a fishbowl, he or she will be able to closely monitor what's going on in that area. If you have retail stores, be sure that your shelving is situated, is organized in such a fashion that you can constantly look to see what customers are doing. You want clear lines of sight down every aisle so that customers can't, I won't even call them customers, so that thieves can't hide as they steal your material. We have found great success using convex mirrors, those big, gigantic, weird-shaped mirrors, putting them in the corners of the retail area up near the ceiling so that your people can see what everyone in that store is up to. And potential thieves can see that they're being watched. Okay? To maintain a good, accurate, perpetual inventory, you have to assign people to the right jobs in your warehouse. Your most technically competent people that you employ should be in receiving and put away, because material's not going to get put away incorrectly if it's being put away by a technically competent person who knows your stock. They're also going to know that you're receiving the right quantity of the right item. Too often, distributors make a drastic mistake in taking that most technically competent person and appointing them as warehouse manager. Why do I say this is a mistake? Because they may not be a leader. They may be so technically competent and so excited about doing things just in a certain way that they land up working themselves to death. They have the attitude, if we want it done right, we have to do it ourselves. You may have seen this. Everyone else stands around watching someone work themselves to death. Good warehouse managers don't necessarily have to know your products, but they have to be leaders. They have to be able to designate responsibility to people, inspect their work, make sure that everything is done according to your inventory-related policies and procedures. When we see a totally out-of-control warehouse, we often recommend a new warehouse manager. And some of the best warehouse managers I have seen are retired military drill instructors. Those men and women know that there is a right way to do things and a wrong way to do things, and they will not tolerate things being done the wrong way. Now, I said your most technically competent people should be in receiving and put away. Your new employees should be assigned the task of picking orders under careful supervision. Why? It's easy to check their work. We can make sure they're pulling the right products. We can correct them. We can send them off to get the right material if they pull the wrong item. If material is put away incorrectly, you might have to conduct a treasure hunt to try and find it in your warehouse. Now, a good warehouse, one that has an accurate perpetual inventory, utilizes bin locations. I want you to assign bin locations to any space in your warehouse used to store material. This might be a shelf, this might be a pallet rack, this might be a floor area where you're storing material. With a good bin location system, a new employee can be productive on his or her second day of employment. Now, I say on this slide, install a flexible material storage system that allows products to be stored to minimize the cost of filling orders. Most warehouses can use pallet racks, can use shelving. I don't like to use specialty storing racks or storing equipment unless they are very, very carefully assessed and appropriate for the products that you're going to stock, because they limit your flexibility in storing material. And if you don't have flexible capabilities in storing material, your put-away people will be forced to put material where it doesn't belong. Now let's get back to the bin locations. I like modular, easy to find bin locations. In this example, we're looking at a bin in Section A of the warehouse, Aisle 3, the third shelving unit, fourth shelf or pallet level from the bottom. Okay? Easy to understand. I know I have a good bin location system when my warehouse workers are productive on their second day of employment, meaning they can find just about anything in the warehouse. Now, to maintain an accurate perpetual inventory system, you have to utilize 3 different types of bin locations. Now, remember I said a bin location is a place to stock any type of material in your warehouse. We call them fixed locations, random locations, and holding bins. And I want you to be sure that your material handling capabilities they are appropriate for your peak level of activity, the most inventory that you'll have in your warehouse through the year, or the most orders you're going to process in an hour during the day. Now, when I talk about fixed bin locations, that's space reserved for a specific product. If you're out of that item, that space remains empty, awaiting the replenishment shipment. The pick face of a warehouse contains those fixed bin locations used to fill orders for a product, or typically used to fill orders for a product. Now, you might have several fixed locations for a specific product in a warehouse. You might have some counter sales, and you might have larger quantities going out through a staging and shipping area. You might stock this product in several fixed locations. Now, you might say, why don't I just have space reserved in my warehouse for each item? Why don't I only use these fixed locations? Well, if you only use fixed locations, you have to assign enough space in your warehouse to hold the maximum quantity of each and every product. This is going to waste space, a ton of space, because you don't have the maximum quantity of every item on hand at one specific time, which is why we also utilize random bin locations. A random bin location can hold any product if that particular space is empty. I received three pallets. I received 3 pallets of item number A100. You can see that I stored them in 3 different locations in my warehouse. Now, if you have to fill orders from random locations, you need a good warehouse management system, also known as a WMS, warehouse management system. Why? Because a warehouse management system will keep track of the actual quantity of a product in each of those bin locations. It just won't tell you that you have 100 of item A100 in your warehouse. It will tell you that you have 25 of that item on one pallet, 25 on another pallet, maybe 50 on the third pallet. This will allow the system to direct your pickers to pick either the oldest inventory first, or pick your orders in such a way to minimize the number of actual picks, product movements in your warehouse. Now, even if you don't have a warehouse management system, you're still probably going to want to use random bin locations. And I get frustrated with this because warehouse workers don't accurately record and maintain where they put surplus bulk storage quantities of a product. They receive a product and the entire quantity of that product can't fit into the fixed bin space that you've allocated for that item. The rest of that stock has to go somewhere. Oftentimes they put it on the top of a shelving unit or in a higher pallet rack level. This can get very frustrating. I've seen many cases where I've gone out to a warehouse and all of the warehouse workers look as though they have nosebleeds. Their noses are pointed up in the air as they scan the top shelves, as they scan the top pallet locations, looking for that bulk storage, that surplus quantity. If you don't have a WMS system, please go out, buy some erasable magnetic labels that you can use to designate, to place at the fixed location where any surplus stock is located. Remember I said your most talented, technically competent warehouse people should be in receiving and stocking. As they put away stock, these people should have the diligence to write on an erasable magnetic label where any surplus, excess inventory is stored. Place that at the fixed location so that when that inventory is needed, people can find it very, very quickly. Now let's talk about holding bins, that third type of bin location that you need to maintain to achieve your goal of an accurate perpetual inventory. Holding bins are used to store material that is not currently available to customers. It may need to be inspected. It may be just returned from a customer. It may need to be sent back to the vendor. It may need to be reworked. It may need to be repaired. It may need to be repackaged or somehow processed before it can be sold or used. Why do I want to isolate this inventory? Because it is not currently available. Okay, it's not currently available to customers. I can't consider it part of my perpetual inventory that I can use right now. I own it, but it can't be used. Now, a lot of people are convinced that barcoding is the perfect solution for maintaining an accurate perpetual inventory. As I said at the beginning of this presentation, technology is important, It provides a great tool. But like any tool, it must be properly used and used in the right environment to be successful. In a good barcoding system, all material movement is scanned as the material is received, moved from bin to bin, or taken to fill an outgoing order. You know where every piece of every product is. What's this going to do? Well, in addition to helping you maintain an accurate perpetual inventory because you know where every piece of every product is, it will increase your productivity. It will reduce mistakes, misplaced inventory. It's going to make your warehouse workers much more productive. You're going to have an accurate perpetual inventory because that perpetual inventory is going to be updated instantly as material is moved from bins, put away, whatever. It's going to eliminate the manual task of checking orders for accuracy. And realize that whenever you do something manually, whether it's checking orders for accuracy or keying in quantities in a computer system to confirm what was shipped on an individual order, you have the opportunity for a mistake to happen. Now, if you're considering barcoding, I'd also like you to explore the benefits of voice picking systems. These have all the advantages of barcoding, but instead of carrying a barcode reader, your employees wear headsets. These headsets are connected to your computer system, and they are told by your computer system what bin to go to and what to do, what to put away, what to pick, etc. Employees then verbally verify that they're at the right location doing the right task to your computer system. The biggest advantages of voice picking systems are that your warehouse workers don't have to they don't have to handle a barcode reader. Their hands are free. They're wearing a headset. They can operate with two hands. What does that do? Makes them far more productive. And we found voice picking systems are such that your warehouse workers, especially your older warehouse workers, can be trained much, much, much faster. Your implementation time is much quicker. But as I said before, new technology is not a panacea. Less productivity can be the result of too much technology. If you try to implement technology in a warehouse that doesn't have good policies and procedures, you're going to be making mistakes faster. I have never seen technology work well in a disorganized warehouse. But you might employ technology that is not cost effective. You're not getting the return in a reasonable amount of time. Look at low technological solutions first. By this I mean clean up your policies and procedures. Put clipboards out in your warehouse. Use those magnetic labels. You want any vendor who offers you a technological solution to demonstrate to you that you're going to see a payback, that that equipment is going to be paid for in entirety in no more than 12 to 18 months, in addition to the actual cost of the equipment. Please understand your training costs and the costs of possible disruption to your business. Now, I couldn't discuss an accurate perpetual inventory, maintaining accurate counts in your warehouse, without discussing the counting process. This is an auditing process. This is the process of verifying that the quantity in your computer system agrees with the quantity that is actually out in the warehouse. There are two basic ways to verify your counts, the quantities in your warehouse agreeing with what's in the computer system. It is a full physical inventory or a cycle counting program. Now, you're probably familiar with a full physical inventory. This is where all the products in one location are counted at the same time. Usually this occurs once a year. But we've seen a lot of problems with full physical inventories. Time constraints in customer service. What do I mean by that? Well, if you're counting everything in your warehouse, chances are you've had to stop servicing your customers during that time period. There's pressure on you to get back to business. That's a time constraint. You're trying to get the most accurate count possible in the time allotted. Your counters may not be properly trained and may not have a vested interest in the goodness of the count. What do I mean by that? Well, you might have everyone in your organization who's breathing out there counting. The receptionist, the payroll clerk. You might go out to an outside service and hire temporary workers to count your inventory. They don't necessarily know your products. Many of you have very different items that are almost identical in appearance. And, as I said, they might not have a vested interest in the count. What do I mean? Their goal is to put down on that piece of paper whatever management will accept so that they can go home. If you have a full physical inventory and you have count teams, you send two people out together, one person counts, the other person records the count. I want you to designate who was on what count team. Match experienced people with inexperienced people. If you let people form their own count teams, chances are you're going to have experienced people counting with experienced people, and the payroll clerk will be out there counting with the receptionist. We also want count teams formed so that their minds stay on the process to get it done as quickly as possible. How do we do that? Well, we form our count teams hopefully with people who don't like each other, who hate each other's guts. Why do I say this? Well, they're going to keep their mind on what they're doing. Their conversation will not stray into who's dating who or who's going to win this weekend's football or baseball game. And if one of them tries to take a shortcut, the other one will inform on them. They'll rat on them. Okay? If they are afraid to take a shortcut because the other person will turn them in, will inform on them, you're going to get an accurate inventory. You won't have people saying, oh, looks like there are 100 in the box, just write 100 down. You're going to get an accurate count. But even if you get an accurate count during that physical inventory process, how long does your inventory remain accurate? Chances are probably 15 minutes until you start filling orders again. This is why we usually recommend that distributors abandon their full physical inventories and adopt a cycle counting program. Cycle counting is the process of counting part of your stock inventory every day. This usually results in a more accurate perpetual inventory. And remember I said, without accurate stock levels, effective inventory management is impossible. What's my goal? I want your inventory to be no more than 2 to 3% off, both pieces and value. 100% accuracy is our goal, but you can be in pretty good shape if you're no more than 2 to 3% off. Now, there are 5 basic cycle counting strategies. We call them geographic counts, rank-based counts, random counts, low balance counts, and finally, exception counts. What's the difference? Well, in a geographic count, you count all items an equal number of times every year. This is what we call wall-to-wall counting. We start at one end of your warehouse, count a certain number of products every day till we get to the other end. Do the process again. Many companies try to count each item twice a year. Now, you might be surprised. I'm but I'm going to tell you, geographic counts are usually a total waste of time. I much prefer cycle counts based on product rank. Bins or items with a large number of hits are counted more often. Now, what do I mean by a hit? A hit is a request for a product regardless of the actual quantity requested. Think of it as line items on a sales order. A customer orders 1 piece, that's 1 hit. If a customer orders 10 pieces of the same product, that's still 1 hit. If they order 10,000 pieces, still 1 hit. I would suggest to you that every time someone goes to a bin to pull an order for a product, you have another opportunity for an error, or if you study total quality management, what's referred to as an unquality event to occur. I love that. People don't make mistakes. They don't screw up. They just experience unquality events. Now, the items that have the most hits are most likely to have inaccurate perpetual inventory balances. These are also the products that your customers are requesting most often. They need to have accurate balances because you need to know what's out in your warehouse. Slow-moving products, even your dead stock, are usually 100% accurate, and they can have what we call an extended count cycle. They don't have to be counted as often. I recommend that you count your items that fall into an A classification. Usually those are the items that represent 80% of product requests, 80% of your hits, 6 times a year. You're never more than 8 weeks off from counting one of those products. B-ranked products will count twice a year. C, D, and your dead stock once a year. Rank-based counting is best for maintaining accurate stock levels. Now, if you have an idea that people are stealing from you, that you're losing some inventory due to pilferage, I recommend you have random counts. Random counts, yes, are also a statistically valid way of determining overall inventory accuracy. But I'm not interested in statistically valid methods. I'm interested in getting you the best possible count possible, the best, most accurate perpetual inventory possible. I will only use random counts if my counters don't need to know what they're counting on a specific day. If I suspect them of theft, okay? Low balance counts. We use low balance counts when you don't have enough time to do a full rank counting. Products in a low balance count are counted when the on-hand quantity falls down to the minimum stock levels. Because the minimum stock levels are low, it's easier to count, faster to count these products. Because faster-moving items tend to be replenished more frequently than your slower-moving products, A items in a low-balance count system are counted more than other items. Okay? So we've seen some people count at put-away time. Because the number of products falling below the minimum count each day, managing a low-balance count program can be a bit tricky, can be a bit challenging, but you will tend to count fewer products per day than you will under a rank-based count system. And if you don't have time for a rank-based count system, a low-balance count option probably is going to give you some good results. The final counting method are exception counts. These are when you count products that have an obvious accuracy problem, unexpected stockouts. The computer said we had it, but when we looked in the bin, it wasn't there. Okay? A negative on-hand quantity. The computer says you're out of it, but you keep selling it. Those products where you see continual inconsistencies between the perpetual inventory and the actual quantity counted. Okay? We want to count these products. Now, I suggest as you establish your cycle counting program, you use a combination of the rank and exception-based counting programs. Count products with a greater chance of error more often. These are your A-ranked products, those accounting for 80% of your hits, and immediately, on the day you discover a problem, count items that have an obvious perpetual inventory error. These are your exception items, your unexpected stockouts, your negative on-hand quantities. If you use barcoding or a voice picking system in your warehouse, if you have a fully functional WMS system, yes, there are setup costs. Every bin location must be barcoded with the barcode ID number. Those labels should be permanently attached. And then either every piece of every item received must be barcoded, or you also have to attach a barcode label on the bin to identify the item that's stored in that bin. Okay? But there are some advantages to achieving an accurate perpetual inventory in a barcode system, in that we can incorporate the cycle counting process into the order picking process. What do I mean? Well, in a good WMS system, your pickers are prompted occasionally to report back to the system how many pieces are left in a bin after they pull a certain quantity to fill an order. This is incorporating your cycle counting into your picking process. Now, as I said before, how accurate is accurate, and I said on a previous slide, I want you to be 2 to 3% accurate eventually. The suggested initial tolerance, whether I know you're in trouble or not, is 5%. This standard was actually set by the Material Management and Accounting System Standards for federal contractors. Now that tolerance level is going to vary by the quantity maintained in inventory. We'll have a higher tolerance for products where you store tens of thousands of pieces than products where you store 1 or 2 or 3. How the product is counted. If you're going to count using a scale, if the products are too small to count by hand, you might have a tolerance for a specific item up to 8 to 10%. The value of the product. Your expensive items, you want 100% accuracy. Subjective management decisions, I've seen many times where management gets very frustrated when they suspect that a certain item is pilfered at an industrial distributor or hardware store. Often these are products like screwdrivers, and they demand 100% accuracy on these products. Any cycle counting or physical inventory system should give you a discrepancy report. All of those bin item combinations that exceed your tolerance level. These reports should also show you transactions for these products so that you can easily and quickly reconcile the count quantity. If you're off by a certain number of pieces, as I am in this example, if you look towards the right-hand side of this report, you can see I'm off 22 pieces. I'm missing 22 pieces. But I also see that 22 pieces of this particular product are due to Jones Electric on order 30042. Chances are I am a victim in this case of what's called paperwork float. The material has been removed from the bin, but it's still showing as part of my on-hand quantity in my computer system. I actually have a good count on this product. Okay. Management should carefully review every item that falls onto a discrepancy report that's listed on that report. Look for problems. Look for common reasons for discrepancies. These include the transactions for the item not being properly recorded, the wrong quantity taken to fill an order, the wrong product taken to fill an order. These are your unauthorized substitutions. The product filled from a different bin location. Warehouse management systems maintain quantities by bin locations to direct pickers to pick orders most effectively in the shortest period of time. To do this, we have to maintain accurate quantities in each bin location. So we have to be sure that products aren't taken from the wrong bin or stock isn't replenished in the wrong bin. Oftentimes, we see inventory problems with perpetual inventories due to unit of measure misrepresentations. People are filling orders for cases rather than pieces, or pieces rather than cases. We'll see data entry errors, damaged material. All of these are things that can be corrected by revising or reinforcing your inventory-related policies and procedures. Finally, we have had great success in maintaining accurate perpetual inventory balances by rewarding employees for performance. And this is a group effort. If cycle counts during a specific week are within your predetermined guidelines, if you have achieved your cycle counting goals, your perpetual inventory accuracy goals, all employees in the facility with access to inventory, anyone who touches inventory gets a small bonus, a small little reward in their next paycheck. If you're not accurate this week, if you don't meet your cycle counting goals, no one gets that bonus. What this is going to do is encourage people to watch each other, to correct each other, to make sure that every employee is handling your inventory the way management would out in the warehouse. This is your goal. Now, we have covered a lot over the past hour. I want to just review the keys to success. Make sure all employees understand the cost of bad inventory management. I want you to utilize bin locations. Okay? Make sure the right person is doing the right job. Remember I said your warehouse manager has to be a leader, and your most technically competent people should be on the receiving dock and putting away stock receipts. Establish your inventory policies and procedures guide. Ensure that all material movement is properly recorded. Cycle count to maintain accurate on-hand quantities, and make sure that everyone realizes that an accurate inventory is your company's key to success, in that maintaining that accurate inventory is everyone's responsibility. On your screen right now, you see my contact information. If you have questions, please let me know. I'm anxious for you to achieve success. Now, I'm going to open to questions right now. If you'd like to ask a question, please type it into your question manager. You can access the question manager by hitting the Q&A tab at the top of your screen. Okay? We have one question that is, how do we get started? How do we get started? How do we know that we're on the right track to achieving that accurate perpetual inventory? That's easy. You start by enforcing the importance to all of your employees. Have them understand the cost of bad inventory control, what it's costing your company. Then you create your policies and procedures guide. Third, you protect yourself against theft. Lastly, you implement a good cycle counting program. Following these steps you will be successful. Okay. I see there are no other questions, and it's 12 noon. I want to thank you all for attending this broadcast, and I look forward to our next webinar. Thank you, and have a good day.